Hello, this is the market recap for the 8th of the 6th, 2018. So it's now Friday. We entered a trade back here. I actually exited the trade, but I'll explain that shortly. This is the price. Around here is where we entered the trade. And when we entered, our stop loss was below the most recent low, which is here. Then as the price came up and broke that high, then the stop loss moved to the most recent low, or 10 pips below the most recent low, which was there. Then the price came down and zigzagged up, broke these highs, broke this high in particular, which means we can move our stop loss from this one to this one, 10 pips below that one. Then the price came up, down, up, and broke this most recent high, and so 10 pips below that is where our stop loss was. And then the price zigzagged, went up and broke this high, which means the most recent low, which was actually the same price, or actually a fraction lower than this one. So if we get that in that scenario, we'll just leave the stop loss at, like we never lower the stop loss. So if the price comes down and makes another most recent low, that's lower than the one we've already had as our move stop loss to, we wouldn't lower it to go for this one. We just leave it. So then the price came up. Then if we move across, price came down, then went higher again. So then we got to move our stop loss to the most recent low because the most recent high was broken. So 10 pips below that was where our stop loss went. Then the price came higher again, kept coming up. Up here, there was no down candle. It went up, up, sideways, sideways, up, sideways, up. So that was all up. There was no down, so that was just one push. Then we had the high, then we had this down candle. And this candle formed at 10 o'clock last night, from 9 until 10. And I went to bed at 9:45. And sets a down candle. The first down candle is a very possible area where if we had an up candle that broke the previous high, we would need to move our stop loss to. So because I was going to bed on the first down candle, I actually exited the trade because I didn't want to have to wake up during the night to monitor the trade. So I exited the trade at 103 pips from the entry, which was down here, all the way up here, 103 pips. And then my thinking was, if I wake up in the morning and the price is lower, but hasn't gone as far as the stop loss, I'll re-enter the trade because it's still a valid trade. And if it's moved up, I'll just leave it and wait for the next trade. But that just means I could have a good night's sleep. So I exited the trade for 103 pips. Which was cool. Actually, I might even put a bit of a entry was about there, and exit was around there, and it was about 100, something like 103 or 105 or something like that. We'll just put 103 pips on that trade there, and then the price came down. So red candle was down, blue candle was sideways. Then we had an up candle, then down candle. Then up candle, sideways candle, then down candle, then down candle, and that's where we're, then a small up candle, and then this little candle that's still forming. So we haven't had this big trade we were in hasn't officially finished yet. I just exited early. And this is still a valid area where we would still be in the trade. And because I was able to re-enter the trade from where I exited last night at a better price this morning, I got back into the trade. So if it comes down, it's our stop loss, that's absolutely fine. But if the price comes up, then we're still in the trade, everything's dandy. So now that we actually exited up here and re-entered at a lower price, the risk on this trade is now only 21.4 pips, and we've already made 103. So this trade is guaranteed to be a winner anyway. We've already locked in more profit than we're risking. And if it moves up, fantastic. If it comes down, we lose a little bit. So that's where the market's at now. The other thing I will start making sure I mention every day is, at what point are we going to start looking for reversal signals? So we should always keep an eye on the 4-hour chart to see what's happening on here and find out where the price has to move to before we are in a sell trade versus a buy trade, or sell bias, we could call it. So where we're looking for sell trades, not buyers, or looking for buyers, not sells. So if we just come back here, the price moved up, down, up, down, up. This move up here broke the most recent highest high. So therefore the point where we would look for sells has moved to here. So if the price came down below this green line, we would be looking for sells. But the price came down, down, up, down, and then moved up and broke the highest, most recent high, which means we can move the stop loss here. And then the price moved up, then down, then up to here, and now it's still moving down. But this move up broke the most recent high, or the highest, most recent high. So then the stop loss, or the sell bias, would be below this red line. So we'll get rid of that green one. So that is where the market is now. If the price comes down and hits this red line, we're going to start looking for sell trades. But because it's above this red line, we're going to keep looking for buy trades. And that's obviously the trading all happens on the 1-hour chart. And this is the 4-hour. We can see up in this top left-hand corner, Euro USD 4, H4, which means hour 4. And if we go to the Euro USD H1, that's the 1-hour. So we're back over at the 1-hour, and I've got that line on the 1-hour which is at the same place as the 4-hour, which is this dotted red line. Because we've already got another dotted red line, let's make that something else. There we go. So if it hits this dashed line, the price comes down and hits that. That means the 4-hour would have done the same and hit the sell bias there. So that's where the market's at. We're still definitely in buy zone, so we're just looking for buy trades as soon as this one finishes. And the last thing I'll mention is I haven't started doing it yet because I'm still new to this strategy, but there's an idea of it's called pyramiding a trade, which is if you get a reason to enter a second position on a trade, then you do. So the terminology I'm going to use for that, which I'll still just monitor for now, but the terminology I'm going to use is as soon as the most recent, as soon as we get a zigzag down, so as soon as we get a high that doesn't break the previous high, then we're going to start looking for an entry. So that is a perfect example there. I might just get rid of this box for now so we can see this clearly. So the price came up, down, up. This high was lower than this high. So we're still we're looking at buy signals. We're in a buy trade, but we've got a low that didn't break a high that didn't break the previous high. When we get that, we then look for a break of the high, of the most recent high, like the lowest one. So in this case, the price came up, down, down. So it's made like a little zigzag down. And then the price came up and broke this. I'll just shrink this down so you can see it. It broke that high right here. This red candle broke that high. That as soon as it breaks that high, I might put some terminology around it, but probably I'm thinking like 5 pips, something like that. It's just basically as soon as it starts coming higher than it, we get in. And that would be one there, which means this whole way up, we're actually in 2 trades. So this 100 pips run suddenly becomes a 200 pips run, then the price comes up, down, up, down, up, down. And here we can see the price went high, made a high, and then a lower high. So that would be another time we would enter a trade. So we're still in the first trade and we're still in the second trade. And now we're looking at entering a third trade, all in the same move. So the price comes down, then pushes up and breaks the most recent high, which is that one there. As soon as the price comes up and breaks that most recent high, we enter a third position. Then the price comes up, down, up. And now zigzagging around, and we haven't got a break of the most recent high yet. But if the price comes up here and breaks this most recent high, that would be another entry. And the stop loss is in the same position the whole time. So the same terminology applies when we're moving the stop loss up, but suddenly it would be a stop loss for 1, 2, 3 trades and possibly a fourth, which means this 100 pips move would have had this entry here up to wherever we exit. Let's just say we exit, I don't know, around there somewhere. That's 100 pips. This one is at basically the same price, so that's another 100 pips. This one here would be 28 pips, 28 pip move. So I've put 100 there, 100 there, 28 there. And then if it moves, and that's only assuming we exit around here. If the price keeps moving up, then all of these trades keep making money. The downside to this strategy is if the price comes down against us, we're having 3 small losses at once. So like in this example here, if the price comes down and hits our stop loss, this 20 pip risk that I'm risking now is suddenly 60 pips. We would have made a lot more than that, but with more trades comes more fluctuation. So that's why I want to be very careful before implementing this strategy. But from what I can see, so like recently, from our past trades, the strategy looks like it would be more profitable than not. So worth doing. But yeah, I'll keep testing that and we'll see how it goes. And that is the daily recap.